Welcome back, everyone, to another episode of Frank Finance, where you can get your honest financial information and your questions answered. Today's discussion is to be talking about home ownership and how do you get started, and what are the things that you need to think about, and what is a checklist that you should keep in mind. So today's agenda is really going to talk through what I were to think about it in 4 stages. So we've got the thoughts and only thoughts stage, the dip your toes in the water stage, no time for cold feet, and poppin' bottles stage. And then once we get through all of these, call it themes, we will move into what I believe is now the fun area as a finance person, to talk through the numbers. And all of the documents and checklists that will be reviewed today will be available to you on my Discord link below. And so please go out there in the hashtag finance files and take advantage of this. So the thoughts and only thoughts stage is really where you start calculating the information that is out there for you to think about. So the first and foremost, why do you want to move and where do you want to move? Thinking about, is it for a family? Thinking about, is it because you don't want a landlord above you? Are you doing it as an investment? Do you want it in a certain school district? Is it your first time home? Are you looking to get into something that will allow your family to grow old together? These are things you have to think about to what is your why. Then think about your cash flow or your finances and also your credit score. So from a finance perspective, can you put the down payment down? What do you have in the bank today that will allow you to buy the house that you're interested in? And then secondly, when you think of credit score, that is going to directly influence the rate that is on the mortgage. That will impact your current cash flow if you go forward with a house. So those are the 2 things to really think about in the thoughts and only thoughts stage. Second, let's talk about dipping the toes in the water. So dipping the toes in the water is really where you start to get the process rolling. So first and foremost, and a couple of these items can be interchangeable, these first 2 here, so keep that in mind. But first and foremost, find a realtor. Talk about your thoughts and only thoughts with them. Find out if you jive with them and that they have the same interest you do, and understand that you're not willing to maybe buy in the first 2 months and that it's okay to wait, or that certain things are very important for you and you're okay to wait under that, or what your time frame is and that they respect that. You will know if you and your realtor jive or not. Second, now you have to think about a bank. What banks do you want to work with? Work with 2 or 3 of them. Find out which lender you're comfortable sending emails to after you go visit a place and say, hey, what about this house? It's about, $200,000. What kind of rates could you give me before we sign the approval letter? And after you start getting, the realtor and the lender under who you want to work with, then third, now you're going to actually find the time to sit down and fill out the application with your bank that you choose. Because why is this important? When you get to the next stage, which is no time for cold feet, you need to have a pre-authorized letter in hand with the realtor ready to write it up and submit it over to them. You don't want to send a letter to them before you've gone through the stage of actually letting the bank get you a pre-approval. Now, why would you wait to get a pre-approval till after you find a lender and a realtor? This is my personal preference. If you're not ready to move forward and you can't find those people, why have a credit check hit? It's not worth it until you're ready. That's just my opinion. It doesn't hurt to do it right off the bat. In fact, some realtors might not even work with you if you don't have one of those. So all 3 of these can be interchangeable, but those are the steps in which I went through when I purchased a house. And to me, from anyone I've worked with or talked with, it is a good way to start. Okay, so you've got all your ducks lined up. It's time for no cold feet because stuff is about to move really quick. And so here's what happens in the 3rd phase. So you find a house you want. Your realtor submits the offer with the approval letter from the bank that you're good to go. Then you're going to find out really quickly whether or not they accept your offer. Let's assume that they accept the offer. Now things start to kick off. First and foremost, you're going to have to get an inspection done on the property ASAP. We're talking 10 days, roughly. Every state, every realtor, every document is different. I'm giving you an estimate. 10 days, roughly, is what I had for the document to get signed. Some places are 14, but it's very quick. So having an inspector understanding who maybe your realtor would suggest is a good place to start. Then, after the inspection, you're also more than likely going to have to put up money, which is called earnest money. Basically, this is when the buyer, aka yourself, now has skin in the game. So this is something that is given up early in the stages of buying a house that basically says if the inspection goes good, the appraisal goes good, everything in the bank loan goes good, that it'll get applied at closing. But if for whatever reason you're back out of the agreement completely, the seller is out money like property taxes, insurance, and the whole 9 yards, and they want you to have skin in the game. So that's where earnest money comes in play. And then finally, in the no time for cold feet stage, this is when the bank, after you get through the inspection stage and you get the earnest money sent up, now the bank is going to start asking for documents because they're going to need your tax documents, your last couple X months or years of income verification with your employer. They're going to start the underwriting process. They're going to go through an appraisal. So if you're buying a house that is worth probably maybe more than what the market or comps can support. So when I speak comps, I mean the comparables. Your realtor will help you with this, but thinking about comparables in the market is very important because if there isn't comparables that can support the rate in which you're going after, it's going to cause headache down the line. Because the bank will only give you a loan for what it appraised for. So if you give an offer for $200 and it appraises for $150, either A, you have to find the difference of the $50,000 and give it to them plus your down payment, or B, you're going to have to get the seller to come down to $150,000 or a combination of the two, which is why if you're stretching a house's value, it's very important that you understand what could potentially come of that. Okay, so that is finishing the no time for cold feet. We're moving forward. It's time to get into the poppin' bottles stage. Before you sit down and sign those documents at the closing, this is where you are going to go through and do a final inspection of the home. You haven't seen the house in 45 to 60 days. It's time to go back, since maybe the inspection or since the offer that was submitted, to go see is the house in the order in which you wrote up the document or your realtor wrote it up. Then finally, you get to closing. So now what to expect at closing. So if you've done your due diligence early and talked with your banker, they will help you out with this. But to know what's going to happen at closing is you're going to pay somewhere between, call it $3,000 and $5,000 for roughly, and every state's different. So please talk with your bank about this. But you're going to pay somewhere in that range for closing costs to the bank to get the title switch, the appraisal, you name it. Then, if you don't put 20% down, they're going to also ask for escrow. You'll have to also put down a certain amount that will give them, call it 2 months worth of balance on the escrow. So that would include things like property tax, homeowner insurance, and PMI if necessary. Now escrowing, if you don't put 20% down, the bank is more than likely going to require it, just as an FYI. So that would add to how much you have to put down at closing. Then you're also going to have your earnest money come in as a credit to what you owe during closing costs, and you put down the down payment that you've agreed upon with your bank. There's various things that can change what that down payment amount is. Maybe you get the seller to put down closing costs. Maybe you rope a 0% down payment into the agreement, but you buy your points. There's so many different things that I've heard in the last, call it 6 months, on how people are financing their homes, that this is why you need to be close with your banker, understand the big picture. And then finally, you're going to sign there, get the keys to the house that you're now probably really excited at this point, and you can start the move-in process and start popping bottles and enjoy some champagne if you're of age, or maybe some non-alcoholic champagne as well. But as promised, now I would like to move into the documents that I was talking about. All right, so as discussed, this was the checklist I just talked through. Here's all the items in each one of those buckets that I was referencing. This will be in the first tab of the Excel doc within the Discord #FinanceFiles. and it'll give you some some comments here down the side to think about. So now the fun part. Let's get into the fun part, which is the financing. So what I have set up here for you is basically a walkthrough, things to think about, 3 sections, and all of them are linked up to amortization schedules. So all you have to do is literally type the information in on this document here, and it will do everything else for you. So what is the house payment that you think that you will offer? Starting at the top here, maybe you want to think about, what if you buy the house at 5% down or 20% down? So basically filling in these items here. I have some comments over on the side to talk about things to think about, but these are areas of discussion with your bank. And also to think about is, what is the terms? What terms make the most sense? So if your bank says, well, here, if you do a 10-year, a 15-year, a 30-year, this is the rates we can give you. Well, you could do one house across all 4 of these and get every single rate built into there so that you can figure out how that impacts you financially. So that's the first step, is understanding roughly the ballpark of the houses you are looking to buy. Another big thing to think about when you're working through this is, once you get comfortable with a term like maybe 30 years and it's at 3.5% and you feel that you'll put 20% down, now understand you can start plugging and playing in here that says, what if I buy a house at 150, 160, 70, 180? How does that impact my cash? And what does it require me to pay every month? So, second section here, monthly payments. So thinking about, what is your mortgage amount? So this will be basically what is left after the down payment over 30 years at the rate that you discussed with your bank. Then, property taxes. Now this is so unique to everywhere that you purchase. You can get it off Realtor.com, the city website, but states are anywhere between, call it 1.25% to almost up to 2%. Also, if you're in a state like North Dakota, do you have specials that need to be added to this? This is one thing that you really need to understand and talk with your realtor about, is what do you owe for that property? Mortgage, property taxes, now you've got homeowner insurance, and your PMI. So with all that being discussed, all of these information pieces here are just put in as illustrative purposes and allow you to plug some numbers in, but realistically you should talk with your bank about property taxes, the homeowner insurance. You should talk with who you feel comfortable going with. So if you're with Progressive today for car insurance, talk to them about it. And then PMI, if you put 20% down, you will not have PMI. If you pay a little bit higher in interest rates, you might be able to not have a PMI payment each month. There's a lot of different unique things that are out there in the financing world, and the only way you're going to get these questions answered is to sit down and talk with a lender and have someone that you feel comfortable sending emails every couple days or weeks once you're in the process and you're looking at homes. Then you can actually come out here and figure out what makes sense for yourself. And then on the bottom down here is to think about, what are you going to owe in cash at the end of the day? So we talked about a couple of these items. First and foremost, you're going to have to pay for an inspection. Talk with your realtor about who's a good person to have the inspection with. Then you'll have to pay earnest money. Those are up front, basically right after you submit an offer. Those are the first 2 big things that are coming out. Then the next couple things are basically due at closing. You're going to have a down payment requirement of some percent. You're going to have the bank fees with closing and all that $3,000 to $5,000 I mentioned in earlier in the video. Then you're going to have an escrow of some sort. Now this is dependent on how you and your bank work this up. What I have it set to right now is it's typically 2 months of property tax, homeowner insurance, and PMI. That's roughly what an average escrow is worth. And so that'll be down payment due at closing. And then also, the earnest money that you paid up front is now deducted when you pay it out. I just wanted to show the plus and minus so you understand that it's a net wash. And then you would understand what is your total cash owed. So, now you can come in here and play around with the seller price, the down payment, the terms, and figure out, does it work for you? Does the monthly payment make sense against what you're paying today as a renter or living with family? It doesn't matter. It allows you to truly understand, can we afford these payments? Because these are for 30 years. All right, so I've had a lot of questions recently about how to get through a home purchase, and we discuss a lot of this during my Twitch Call It podcast on Sunday nights at 9 p.m. Central. Feel free to come out and talk about anything like this that you have questions on, or if you'd like help walking through the document. Hopefully, this helps you go through, call it the 4 stages that I would like to think about on how you purchase a home. But as always, I hope you have enjoyed this video and you have a great rest of your day. Bye now.